What's going on, everyone? CryptoVatsik here with another technical analysis video for you. As always, nothing of what you're about to see is considered financial advice, and they're just my opinions. If you enjoy this content, I would really appreciate it if you smash the like button and subscribe to the channel. Okay, today I'm going to be covering rows, and we're currently on the daily time frame. But first off, I'm going to switch over to the logarithmic chart. Okay, so first things first, how did we get to where we are? Coming out of the bear market, we reclaimed this major support area in gray. That was a massive objective and was really the first trigger that led to this run after we had our V-shaped bottom and rounding off higher low, which is very typical in bear markets. You get that V-shaped bottom and then rounding off higher low, otherwise known as your capitulation event and then your accumulation. So a definitive bottom for rows. And then, as I said, we reclaimed this major macro support level in gray. It was a clear and established baseline for quite some time and was also a point of breakdown area in two locations, right here and right here. Okay, when we got this bearish consolidation as well as this bearish consolidation, which led to those dumps. And then we had a beautiful reclaim of that baseline level in gray. Okay, so here's our point of breakdown here, right in the middle of our gray zone. We had essentially our deviation outside of the range, and then we had an impulsive leg to the upside and flipped the upper band of that range into a support level with this push up and beautiful retest and continuation. And then next up, we had this downward sloping trend, this diagonal running along right here, which was technically an unconfirmed trend, given the fact it only had two interactions. You like to see three or more interactions to confirm a trend or to confirm any diagonal for that matter. But I am counting this as our third, which some of you may not agree with, but it's close enough for me to confirm the trend. And so then you notice, what did we do after we broke out of that? We put in a high, we put in a low, formed our range, ultimately above that trend. So beautiful consolidation, providing that acceptance above the breakout that no one could argue very clearly. Many high time frame candle closes outside of that trend with some consolidation, and then in fact got that reclaim of the equilibrium. Okay, our equilibrium in that range right here in green with our swing high and our swing lows, and then a reclaim of the EQ here, which was our sign for continuation. We got our breakout of the range high and beautiful retest of the range high. And then we got our cascading range next up here with our high and down to the low. And I say cascading because it just elevated off of the previous range. Okay, so we had our consolidation 1, and then we got our consolidation 2. And then again, reclaim the EQ, breakout, retest of the range high, continuation. You also notice we had this ascending wedge formed here, which is really nice because it typically gives that baseline after you get a massive impulsive move up afterwards. And what I mean by that is there's a bunch of accumulation and liquidation built up in these ascending wedges that look like this. It's basically a form of accumulation, but it happens vertical instead of your typical accumulation happening typically more or less horizontal. So with all that strength built up, or that relative strength built up, it allowed us to power this next impulsive leg. And then, as I said, kind of forms that baseline of your next likely area of support in green here near the peak of that wedge, or at least at the breakout of that wedge, which is right here before we got that impulsive leg. So really nice to see. We've even got a retest of that zone already off of this wick with a very nice reaction afterwards, and then now have put in a macro range here that we're trading within off of our high and swing low. So for me, it's quite simple. The trend is up, so dips are for buying in my opinion. My invalidation now at this point is the peak of this wedge, which is that vertical accumulation area or channel, and also a full retracement of this impulsive leg here, which we've already got, and now clearly it's visibly going to hold, and so it provides us a clear invalidation point, which is ultimately just our range low of this range that we're in now. So some really interesting things going on. First things first is we've got our market structure break. Okay, we put in our low and we needed to wait for that market structure break to confirm the range low. We got it on account of a higher high here in comparison to these lower highs, broke that market structure, that bearish market structure, and retested it here in green with a beautiful reaction. So if you're bullish, this is a really good sign. We then had another impulsive candle to the upside coming into this supply level up here, which sat just above our equilibrium at the time. And the one thing I look for is a reclaim of the equilibrium as a sign for continuation at a macro level. And to me, this is almost exactly what I am seeing. Let's drill into the 6 hour. Okay, so then as we see it on the 6 hour, so as I said, we got our validation down below on our range low. Now the question is, are these our higher lows out of the bottom, this being our bottom here? You know, is this trend essentially the trend that gets us out of this range? Can't say for sure at this point, it's possible that we end up coming back down below the EQ again, and in fact put in that ultimate macro higher low for some continued consolidation within this range, and then its potential reclaim of that equilibrium, which allows us to go up. Perfectly fine scenario, perfectly healthy, and could definitely happen. But my bias is to the upside currently. And what I'm seeing right now, actually, let's go to the 12 hour. Okay, so what I'm seeing nicely on high time frame here on the 12 hour is clearly we have a resistance area here. No doubt about that in this red zone, okay? But I'm also seeing a lot of pressure being put on that resistance with these wicks, with these candle closes coming up, and then ultimately with the first candle close above that level. Now it looks like we're possibly getting a rejection right now, but this candle still has 8 hours almost to close. So depending on how this candle closes, I think it'll be really telling if we're going to continue and if we've really cleared this resistance area. If we see a red candle close back below underneath, then this becomes our deviation again, just like these other wicks, and then it's possibly back down to these lows. That's why it's good to stick to high time frame, because on low time frame these wicks will really have looked like it broken out. You know, on low time frame you might see a level get cleared for some time until ultimately it just harshly rejects, and you say to yourself, you know, all these low time frame candles were closing above this level though, so it should have been accepted above the level. But then ultimately what it was on high time frame was just one little wick and then immediately back down, and then it's your deviation. That's why you got to wait for those clear and concise high time frame candle closes with preferably a red candle retesting that level and then continuation afterwards. So that's the perfect ideal scenario to confirm a level has been violated. So time will tell. Now the other way of looking at this, let's drop down to the 6 hour. Let's get rid of this resistance block. In my opinion, it's also just a range in itself from our swing high down to the swing low. Let's just make it blue so it's easier to see, and then the equilibrium is blue as well. So as I said, I like to see the equilibriums reclaimed as a sign for continuation. So we put in our swing high, we put in our swing low, we came up, we got rejected initially off of the EQ, but ultimately bounced off this level that we broke here, and then 2 consecutive white candles or green candles thereafter, rejecting off a couple times of what looks to be the quarter quadrant range EQ. Okay, so the quarter quadrant range here of this overall range. But all in all, if we get that reclaim of this equilibrium, I see no reason why the quarter quadrant is not going to get reclaimed and we break out of the range high. So it really doesn't look too bad. And if we just go back to the overall range here, you'll notice we've got our quarter quadrant range EQ here, right? So range high, range low, quarter quadrant to quarter quadrant, and then our EQ. So something like this would be perfectly healthy. I think maybe even another retest of the EQ, since we've now reclaimed it on higher time frame, break out of this current local range that we're in, reclaim the quarter quadrant, and then maybe after that it's a bit of a correction until we end up breaking out of the range. But in my opinion, this could move relatively quickly. We've had a very nice buyback already off of our V bottom right down here, and so I wouldn't be surprised if this puts in a really good run and we ultimately break out of this range and break these highs pretty soon. But the question is, if this trend's going to break, okay, and if we're going to get a larger correction for that ultimate higher low and then reclaim the EQ, and then this is essentially a deviation. But in my opinion, it looks to be a verified reclaim of the EQ. We go to that 12 hour, okay, we're on high time frame. We've got 3 candle closes now above the equilibrium, and it's set itself a baseline too, because the difference between these 3 candles above it is that would have faked a lot of people out. It would have probably faked myself out too. However, it's off of a massive impulsive leg right here. So the fact that we've got some more consolidation now happening after our original rejection above, and then even another rejection but just below, we've got that consolidating pattern inside the blue range now at this point, with some following candle closes above that equilibrium. Okay, so yeah, it looks really healthy, you guys. I'm not gonna lie, I think the next weeks are going to be really exciting, to be honest. I think we're going to see some pretty elevated prices soon, and then after this range we just start to look up. Let's get out of the log. So looking up, my macro target zone is in green up here, okay, because essentially we have already broken this high, which was a natural resistance area to look at, let alone all these other highs that have been broken. So it's very clear that the bull run's begun. We've put in a massive leg so far, you know, off the lows it's put in to the highs 277, so really nice. And now, you know, I think if we start to look above, there's a little bit more of inefficient balance in price, this kind of zone, a little bit of consolidation, but ultimately I'm looking at this point of breakdown area and an area of interest, which was frequently a high time frame SR level, because in here there's just air, nothing really to look at, no data to work with. So that green zone just makes the most sense to me, and I think that's where we're headed. Price looks really good. We've had our bottom, we've broken out of major levels, we've had our vertical accumulation, we've had really nice bounce backs and consolidating patterns returns. We're well above the 100 exponential moving average here in the thin gray line, and price just looks like it wants to continue. So anyways, guys, that's just my opinion. I'll be taking this one up to the highs. Let me know what you think in the comments. And if you enjoyed this video, please give it a like and subscribe to the channel so you don't miss out on future updates. We'll catch y'all next time. Peace.